Well, I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market was mixed last week with some pretty wide swings. Investors did back off from weeks of steady buying for a few days. And then Friday, things did change. Sellers came in early in the week on increased trade war fears and some weak economic numbers, which then again changed on Friday as payroll numbers were extremely strong. Monday saw the U.S. restore tariffs on Brazil and Argentina on what the president called massive currency manipulation. And stocks really got sold that day on a very weak ISM number, which was 48.1 and showed a backlog number of 43. That's some extremely contractionary manufacturing numbers. And maybe when you see the way the market reacted, they were starting to believe that a manufacturing recession was real. Tuesday, President Trump scared investors, saying that maybe they better wait till after the 2020 election to come up with some trade deal. And usually when things like that came out, that meant there was trouble on the trade deal. But that big decline with all that news brought some big drops, as we saw more than a 70% drop, 70-point drop, in that break on Monday and Tuesday. And Wednesday, Thursday, and Friday morning, it's seen a slow reversal as a recovery was coming on continued reports that the phase one deal was close with China. And China came out and say they were waiving some tariffs on the ag. So that was giving hope that the mini deal could actually happen. But fireworks really came on Friday, late in the day. Wednesday, we saw a weak ADP report, private sector jobs, and then Friday payrolls were extraordinarily strong. Not only do we have back down to that record 3.5% unemployment rate, but payrolls, which they thought were going to increase by 183,000, jumped 266,000. It was extremely strong, though some of that are some people coming back after strikes. And they revised upward for September, October, about 41,000 total. So overall, it was exceptionally strong payroll number. These things are so volatile, you never will know what is real, but that really got investors excited in the stock market, which was kind of creeping up pre-opening, exploded to the upside. And now here, as we are around midday, a little bit past the midday mark on Friday, we have S&Ps up over 33 points. So an extremely strong upside move. And this has been really a good environment for stocks related to trade deal news. Every time we had heard about a trade deal coming, the market moved sharply to the upside. But those trade news blips seem to be losing their efficacy now. They've been smaller and smaller, and now it seems like the focus is on the realities of economic conditions. Early in the week, the decline on weak economic data, and then here on Friday, the big explosion to the upside and the very strong payroll numbers. So maybe we're starting to focus on things that are actually real and not focusing on this news that comes out constantly on this trade deal. You know, a trade deal may actually be negative. Wow, I actually said that. How could that be? Well, we've anticipated it so much that, by the time they actually get this phase one trade deal done, which I think is going to be pretty weak and pretty small, Phase 2 trade deal may be a long way off. They're having a hard time agreeing on things, so they'll do something on the minor things they can agree on. But then come phase 2, forget about it. I mean, if it ever happens, it's a long, long way off before they'll be able to get to that. So then we'll be back to the negative rhetoric around that. And the stock market, here at a very, very high price levels, is going to be very susceptible to that. And we can see that the market is very susceptible now to economic news. So that really has the market now screaming to the upside here on Friday. Good, strong economic news. The present wobble that we had in stocks, well, that clearly is ended. But we're going to, avoid any real negative talk on the stock market until next year. We say we're going to avoid it because we think that there's a pretty good top coming early on in the year. But analysis shows that the likelihood is still strong that we're going to get well beyond the 3,200 level on the S&P 500. We're expecting a strong 6 to 8 weeks. So we don't want to say anything negative about the market right now because we've been positive and looking for it to go to the upside. And we still see that now coming through the end of January period. But it's not too soon to say that it would be time for investors to maybe begin to stroll over and look at the exits. Yes, we're going to just say that mild little piece that, come into this late January period, you just got to go over and peek at the door. Well, maybe run. Stocks for the week, they are mixed after some pretty wide swings. S&P 500, tiny gain. Russell, a little bigger gain. The Dow Jones and the NASDAQ, still tiny losers after we had this big downward drop early in the week and then this recovery on Friday. Without Friday, it was a pretty negative week. Bond market moved to the downside, not in a huge way. It tried to rally early on Tuesday on that weak economic news, but then gave it all back. Plus, the 30-year down about 1.5 points on the week. Gold market, very choppy also. Also got a big gain on Tuesday when that weak economic news and the president talking about no trade deal till late 2020. Well, that also failed, and we ended up with a small down week in the gold market. Silver was extraordinarily volatile, chopping up and down, and silver is responsible for this weakness that we see in the gold market also because silver's got a little weaker and later pattern. We talk about this a lot if you watch our Thursday video where we do a big picture on the precious metals. You must watch that. Dollar lost ground, rebounding Friday. Now, it gave up a lot, actually, for the first 4 days of the week and ended up down about 0.5%, which is pretty big. And we're going to talk about in our short-term view that we think this Friday rebound in the dollar is a sell. Oil up about $3.50 on the week, a big gain as OPEC rumor of cuts came to fruition. And we're seeing the big gains come as a result of OPEC agreeing to another 500 billion barrel a day cut all the way through March. Well, in a way, that's a little disappointing because it's only until March and it doesn't really extend the time, just the amount of cuts. And there's always a lot of cheating going on. So we don't really know that that is going to be anything of significance. And we're going to show you when we get into short-term view that we actually don't think that it is going to be all that important. So that is the opening. Make sure you follow us on Twitter at askSlim and do become a YouTube subscriber. You like this video, make sure that you give us a thumbs up. That's it for the opening, and we're going to do something a little bit different because we're in the beta testing of our new momentum tracker. So I'm going to test a little segment right in here called the Investor Pulse. Of course, we look at the pulses of the market or the heartbeat of the market with our type of cyclical analysis. And we have a lot of people that are interested in longer term holdings. So what we're going to do is now start to bring this in on a weekly basis. And I sure do want your commentary about how you feel about longer term analysis. I'm just going to give you a little taste of what this is and where this comes from. I'm always going to use our new momentum tracker for this analysis. And so this is the askSlim momentum tracker in beta. And there's a lot of updates that are about to go on in here. So I'm using the lists that you can see right over here. And you can see the S&P 500, the NASDAQ, and the sectors, and also our focus list that we have in there, the askSlim focus list. And that's really what we're going to look at right in here is the focus list. Now, I want to sort in here on our 84 best symbols that we look at right there. And it's actually 60 stocks and ETFs. These are the best traded ones right there. And I'm clicking on this button right over here. Now, eventually you're going to be able to have this, and you're going to be able to have all of this analysis, long-term, intermediate, short-term analysis, and our biases on all of these symbols, and there'll be more than 1,000 symbols you'll be able to have this on, and our outlook right here. So what I did was because we're doing long-term analysis for this segment, I wanted to go and look at the stocks that were positive or which are negative, and pick out one that's positive, pick out one that's negative, so you can get an idea of what we're looking at. So when stocks are really super positive like this, like you could see Broadcom, very strong conditions suggest only minor declines and higher prices, and you can see all of these momentum indicators are in green, so they're really strong. You can see that. What I wanted to pick out was one that maybe have had a little bit of a correction and that was likely to be able to get some kind of upside in there. So what I wanted to do was get something that has good, strong, longer term momentum, good, strong, intermediate term momentum, and maybe just correcting on the short term, because that could give you a good idea of when you could be entering. So I picked LVS as one in here. Now you could see Goldman Sachs, you could see in Intel, similar conditions for the long term, just some minor corrections going on and really strong. JP Morgan, super strong, you see that, but we're going to focus just on LVS right now, which is in a bullish condition and having a minor correction. So we're going to look at that, and then on the negative side, I'm going to scroll over here, and I'm going to look for some stocks that are bad, and we're going to come right over here, and look what really pops up in here. Amazon. It's really incredibly lagging the market. We have this all at highs, and Amazon is just not able to do it. And you could see all three of these indicators are showing sharply down. Would you want to invest in a stock that was like that? Well, I wouldn't. Let's just do some analysis on those two stocks as we look now at Las Vegas Sands. This is our weekly analysis in Las Vegas Sands, LVS. And the stock is in very, very strong condition in here. And what are we looking at? Well, we're looking at our cycle analysis. And it made a bottom here and moved up and had a little bit of a correction. So this little correction, the momentum in the short term had not turned up yet. But now you can see the stock starting to move up again. Really powerful indicators in here. Our analysis suggests that this will go up well into February. And maybe even well beyond that after some correction. So good, strong look at Las Vegas Sands, and certainly for investors, this looks to us like a hold, if not even a buy. So if you're in this stock, we love it. You could consider buying it, and we look out, for 3 months plus, and this is a very good looking stock. Let's take a look at Amazon for the longer term right in here. And we're going to look here at our colored zones. These are colored phases. And when you're in a green phase, you're in a rally phase. And mostly the green phases give you big upticks. You can see those and those right over here. This is extreme underperformance and a relative strength warning when you look at that. Momentum in here is weak. It's weak on all three things that we look at. And now we believe we're entering into this corrective period. It could get well below this 18 this 1680 level over here, and we think that there's a decline coming through this period in February, and then extending well beyond that. In fact, if I just highlight this right over here, which gives you the really long-term cycle, this tells you there's a potential decline out into July of 2020. This is a very bad situation. The Slimulator Momentum Tracker is showing that, and so is the cycle analysis that I bring you here. So, trying to give you a good feel for using our momentum tracker and how I'm going to use it, and that is looking at long-term conditions. Now, I just showed you looking at the long-term conditions as our algorithms throw them out, and also applying my cycle analysis. You can just look at the momentum tracker and apply your own analysis to it. As you could see, Las Vegas Sands in a very strong condition, Amazon in a very weak condition. And we're going to keep bringing you those. We'll try to bring maybe a few more stocks each time, and we'll see how you like it as we do our longer term analysis in Investor Pulse. Now we're going to take a look at the best and worst stocks for the week. So we always do this where we look at about 5 stocks, and we look at stocks that had good gains and stocks that look like they could continue to have good gains or some reason to buy them, but sometimes they go up and we don't like them. The same thing for the stocks that go down. So let's leave this Amazon chart here and go to CSIQ, which was the absolute best upside mover for the week. Now, this is a rebound, and it gains 12% on the week as the solar module tariffs that there were got put back on the exemption list. So there was a court ruling on that, and that helped the solar stocks and helped CSIQ. But this is not a good pattern. It had this big breakdown over here, a lower low, and now, as we anticipated, rallying into that resistance zone. You know, I've loved this stock in the past, and then when it gives me these negative patterns like this, I have to really back off. I don't like it now, and I think that there's a lot of risk in here. It might be able to make it up to $20 or so, but overall, I don't like it. 12% gain on the week, and I think it has a lot more work to do before it can have any sizable gains. Expedia moves up sharply also, and this is another stock that got killed, and we thought it would move up to the sell zone that you can see right up over there. Barry Diller owns 10% of the stock, and he says he's going to buy some more on good faith, and he has 40% of the voting rights based on some super stock he has. So he really has control on this one, and his control has not been that fruitful for the stock and for investors, as there was this massive breakdown on disappointing earnings. So we think that this rebound in here on this Barry Diller news is bogus. Stock might get to 112, 115, but we'd be a seller up there. Don't really like it at all. Abercrombie ANF is the next one we're looking at here. This one gets a bounce. No real news. It's just, rebounding, and this is Christmas season. We don't like this one either. We think it's going to move down sharply towards $14 sometime in January. So not anything to get excited about in here. And you could see our projection calls for it to move down over this next 6-week period or so. So that's fighting the trend of what we think is going to be an uptrend in the market during this period. The next one we'll look at is PAAS. It's one of the 18 stocks I featured in our gold and silver and mining stocks big picture analysis. You must watch that video. Getting a lot of great comments on it. It's a great video. It's a longer term perspective, so not a big deal that gold and silver is down today or it's been choppy. I think it's trying to make a bottom. And the whole point of the video I did is the super action in the miners, which is just giving you a good sense that somebody is getting ready to buy a lot of metal. And I think that this is foretelling a good period. So you got to watch that video. It's really good. PAAS up about 5% on the week. And Newmont, another one, followed with all of these gyrations in gold and not going anywhere. Well, Newmont just put on these 4 weeks of rally right there. And we think that there is a lot more to the upside as far as that goes. So that's the best 5 stocks for the week. And now I'm going to show you the worst. The first stock I'm going to show you is a stock that I don't think I've ever brought it to you before. It's Okta, OKTA. Not many people are that familiar with the stock. It's in the software cloud category, and this is a top that's being formed in here. So it earnings beat. But the stock still lost money, and this is crazy valuations. Analysts have it as hold or downgraded targets on beating, but look at this. 2020 estimates looking for a loss of 44 cents, 2021 18 cents. Somebody's got a lot of hope for this stock eventually turning it around, but they've been bidding it up now for a couple of years, and now this really looks like a top. You see this engulfing pattern right here? And you see the engulfing pattern right there. Well, do I have this on a little clearer pattern right here? Let's see. There you go. There you have the engulfing pattern and the engulfing bottoms. You could see how that worked. And here is that evening star. It's below this level here. This stock looks to me like it's going to get down here to 90 or lower. So Okta, I think it's a sell, to tell you the truth. And I would put this on the list of stocks that could have a lot of trouble. So that's the first one we're going to look at. A loss that they reported a little better than expected, and the stock does not look good. 8% down on the week. Marvel, MRVL, the next one we're going to look at right in here. This is a really bad pattern. The stock has these beautiful minor cycle patterns in there. Let me get a little closer, zoom in here so you can see the almost perfect cyclicality that you see in these minor cycles that make up the bigger ones. Look at the rhythm that you can see in there. Perfect. Now, almost breaking down already, getting very close with all of this time to decline. That's really a bad pattern. I rate Marvell as a sell. I think it's going to go much lower. I think the top is in. It hit our fib target zone. It gave you that shooting star inside down. All of that is really a sign of a top. And the fact that it's gotten down to this level again, it's got a lot of trouble. I think the stock is a strong sell. 8% down on the week. Earnings miss. Guidance was really weak. It shook up investors, and they are not done selling in here. Ciena, C-I-E-N, the next one we're going to look at. This one looks like it's getting near a bottom in a pretty negative pattern. Now, this is a major top. Analysts downgraded the stock. Earnings are on 12/12 this week before the opening. We think the earnings could give you a temporary bottom, even if they're bad. This is kind of late, and that's what happens when they move down with a lot of negativity. There's a lot of selling in here, so you could see the bottom was anticipated here, and it's now running a little past it. So we think when those earnings come next week, if they're good, well, the stock will temporarily tick up. If they're bad, well, the stock will probably go down and reverse because this low is due right there. So I wouldn't buy the stock. I mean, we're looking for a modest upside reversal. Analysts downgrade the stock, and watch those earnings on 12/12. The next stock we're going to look at also in the tech sector. So we looked at Okta, Marvell, Ciena, and F5, FF5E, 4 tech stocks that don't look good to me at all. And this one you could see coming down into that minor cycle low period right in here, and a little bit late also. We'll be looking for a low to be formed in here and then get a bounce to the upside. Bank of America downgraded the stock this week. I really agree with them. You can see this downward trend going on in here that's been happening for such a long period of time. Let me just grab this. You can see that's the trend that you really had in this big downward channel that this thing has been in. I think it's probably going to continue in the downward channel, and I think our projections in there may be a little optimistic on the shape of what that's going to look like. I don't like the stock, and the Bank of America downgrades it, and I agree with them. And the last stock we're going to look in here is Boeing, BA. Boeing moves down for the week, weighing on the Dow a little bit. Talk is they may just have to halt production in the 737 MAX. Their earnings are really going to get slammed in here. Everybody knows that. But other issues have come up with other models of their planes. Other companies are winning bids on and getting orders that are Boeing being bypassed, and the stock really looks to me like a lot of trouble in here. The next month could have a lot of risk, and then I think some temporary bounces and then down again. So these potential earnings misses that are coming up could really be some devastating misses, and I think that investors, you can see, have been selling it, hit the sell zone several times and moved down again, and that's really a bad pattern in there. So I think that Boeing will continue to move to the downside, down about 4% on the week, and having a lot of trouble. Okay, so we're going to move into the short-term view for the coming week, but a little announcement for you. How would you like to give the gift of askSlim? We have a couple of gift options for you to bring to your to your family, your friends, your people that you know, and I'm going to tell you what they are. Gift option number one is you can give the gift to askSlim. Of askSlim is purchase a level 2 quarterly membership for somebody that you know for only $74.25. This is special pricing that will save you 33% off the regular 2-month rate of $37 a month. Level 2 monthly rate of $37 a month. It comes out to just less than $24 a month during the 3-month period. Now, you're giving a gift, so we don't want you or anybody else to be stuck with automatic renewals if you don't like it. So there are no automatic renewals. You're just giving 3 months of all of our amazing level 2 information, 400 plus videos, plus the incredible stock index report daily, where we get our Zoom live feed, and you get our reports on the weekly stock index report, ETF report, just tons of things that they're going to get. And you can give that for just $74.25 for 3 months. And as an added bonus for you, we're going to send you a $25 Amazon gift card to help you pay for that gift that you're giving to somebody else. So you're going to give the gift of askSlim. What an incredible thing. Just $74.25 for 3 months. No renewals. I think that they're going to absolutely love it if they're learning about the markets. And gift option number 2 is the level 3 quarterly membership for only $196.50. That comes out to 1/3 off of our $97 a month rate. You're just going to be paying about $65 a month. And you will be getting, in addition to that level 2 information, you will be getting this Slimulator. And that has all of our charts in there. It has all of the analysis that we do on the 84 best symbols for trading, plus our new trade ideas, which we put out 2, 3, 4 ideas a day. It's just amazing the work that we're all doing. And again, no automatic renewals at all. You're just going to give the gift of all of that to somebody else. They're going to really love that you've done that. And we're going to give you an added bonus for this one of $50 Amazon gift card coming to you. So again, there's no automatic renewals. You don't get any more bills. You just get a $50 gift from us. And the people you send this to, you give it to, will greatly benefit as they learn about the markets and learn about technical analysis and see our analysis and see how theirs can help them set up trades. It's just absolutely an amazing opportunity. So 2 different gift options, level 2 or level 3. 3 months of information and education. Write to Matt at askSlim.com for the link to the gift page. He's going to send you a link to that page. You'll be able to sign up just by giving emails, names and emails, and then we're going to sign them up, and you can just help a fellow trader, friend, family member gain from all of the knowledge from our team and my knowledge in 45 years as a trader and analyst and coach. All of that you can do, just amazing, for somebody else. And we're going to reward you with a $25 or $50 gift card. That is giving the gift of askSlim. Write to Matt at askSlim.com for the link for that gift page. And if you have any questions about it at all, he'll be able to help you. And here is another bonus. Matt is going to, anybody you give a gift to, Matt is going to personally walk through everything that you've given them and show them how to navigate our site and how to best use that which you've given them. They won't be left alone. We're here to help them. We're always here to help all of our members. So give that gift. That will be an incredible offering. Thank you for listening to that. And now we bring you our short-term view for 5 major markets in the coming week. As always, I'm going to be accountable to what I said last week. I was only about 35 or 40% correct. This is like the 3rd or 4th week in a row we've been subpar, as these short-term patterns have been a struggle. I do admit that, especially as they shift around with all of this news that comes out with trade and how that affects the markets. And we were a lot, if I would have given you pre-opening what our ratings were, they would have been much more up around 60-65%. But that all changed as these good numbers came out and the market started to move up pretty significantly. So we're going to switch over to our daily charts right in here and switch to /light crude to take a look at what we see for the coming week. So while we're buffering there, I'm just going to hold off here a second and let these the computer catch up. So always make sure that you if you have any questions about our analysis or anything, do write to Matt, M-A-T-T, at askSlim.com, or you can write to me at slim at askSlim.com. All right, here we go. And here is the light crude trucking up that short-term upward channel that you see right there. Now, we have something that's called an upthrust going on. Now, when you get into a rectangular or range that we've had in here, and then for a day or so you get out of that range on the upside, there's a threat to that, especially if it comes on news and fails, that it will come down again. And that's what we see in here. So we see a down week coming in the light crude market. We thought it was going to be a down week last week, but the OPEC news was too strong for that, as it did manage to trade up almost every single day. Momentum has been a little choppy in here now. It's turned to the plus side again. So we think that the downside will be modest. We're looking for 57.90 to 57.30 into the short-term supports here. And we do think that light crude will have a down week this week. /GC is the gold market, the next market we're going to look at here. And gold has just continued to run into that short-term resistance zone and not be able to get through. Now, on Tuesday, when we had that big upside move, we got some relief because we wanted to stay away from these lows over here. And we think this next week is going to bring some more challenging action. And then the week after that is when things could get much stronger on the upside. So what we expected was that we would get an up week in gold, and it was an up week all week long. We thought it would get up into this resistance area again, and it did, but then we got this dip on Friday. Now, momentum, which was negative for quite a while, is neutralizing. That is a good sign. And let's hope that we can avoid getting into this negative momentum again and then eventually turn this into positive momentum. That's what it's going to take to get that big upside move that we expect. We're going to look for a small up week in here as it just kind of chops around in here and gets ready to move to the upside, as it's not ready yet. But that improvement in momentum is hopeful. And we're just going to look for it to try a little bit more rally, but not get anywhere. 1460, 1480. This is your 1480 top of the range, 1460 bottom of the range. That's kind of where we think we're going to stay in here, and we really would like to make sure we stay over that 1460 number and don't break that 1450-ish number down over here. Won't like to see that happen at all. So that is a look at the gold market. We're not going to look for anything exciting in here for the next week, but we think that is coming. The dollar sign DXY, well, this was a very weak as it moved sharply to the downside. We thought that it would be a small week with a downside bias. We didn't think it would break the low, but it absolutely did, as it just went into free fall in here, as it appeared that interest rates were going to be going to the downside. But then as interest rates popped on Friday, so did the dollar right there. We don't think that this is real. And because we don't think this is real and it's going to come down again is why we think gold is going to get saved during this week and not have any big decline. In fact, it might actually be able to put on a small gain. So we think the dollar is going to weaken again, and we're going to call for a downside week and testing this area again down here at about 97.35 or 97.30 down there. So there's your support area where it bounced from, and we think it's going to go down there again, and that is likely to help gold and hopefully help silver, which really needs to get a bottom in there. The bond market /ZB, we thought it would be a down week, and it was. This was the only one that we were really pretty good on, pretty perfect. And this right over here is coming down into the minor support. Now, there's that Tuesday big pop that helped gold right over there also. And then you see it just rejected that sell zone and came to a little bit lower low. We think this is going to break below there. There's support here at that at 157.04, but it's much more likely down over here around 155.08 that this is going to move down to. So we're going to call this a down week, maybe try a little bit upside right here, but then move to the downside again. This is in alignment with the new alignment again in the S&P 500, which just refuses to allow the corrections that we see in the analysis. Amazingly strong market, and the bond market is not going to like that if the stock market stays strong. Momentum in here is neutral. It's been very choppy. You see neutral, positive, and then neutral again as the slim ribbon kind of just lays on itself. When you can't get momentum going is when you get stuck in these ranges that you see right in here. But we think that we're going to go into negative momentum in the next couple of days, and it's going to help the market in the bond market move to the downside. So we'll look for a down week in here and momentum turning to the negative side. 55.08 is a reasonable target in there. So the S&P 500, we were really looking good for a while. Now, there is a revision in here. It's pretty clear. For those of you that follow our work, this cycle right in here we're showing you was a ghost cycle. So we had a light gray cycle right where this cycle is right now. And we leave it there because we know that that cycle has been significant before. I'm not going to take it away because it could come back. And that's what it did. And you can see in here this big drop and this big return to the upside. This low aligns with a weekly or intermediate minor cycle bottom. And now we've turned up again and we have a double gap. Now, I've talked about double gaps before, and double gaps tend to be incredibly powerful. And we have the gap up and then a gap up. So what that says is that this low came, and both of these cycles, the minor one and the dominant one, are rallying. So this was revised, and now the low that we were expecting in mid-December only becomes a minor low right over here. We talked about December 16th to 18th. Well, that only now becomes a minor low, and that means that you get up here, you have a small dip, and then you're moving up again. And then there's some more risk out here, maybe into early January, but we think that that isn't going to be that significant. And the next cycle, you could barely see it over here, which goes out in towards the end of January. That's going to be the cycle we think that sets the top in the whole move. So while you see this corrective period over here, we still see the flattening. Remember we talked last week about the flattening that we think is going on. This directional component moving up along with meeting these resistances was likely to flatten this out. We still see that. So you can see our upward projections are not significant in here, and we still see this flattening happening. The real upsurge is probably in January that takes you up past the 3,200 or higher levels. The top of the fib target zone is at around 3,300 on the intermediate, and we don't rule that out as a possibility in a final upside move. So we've been talking about bullishness through the end of January, and we're going to hold on to that. Momentum incredibly strong. Resistance right over here causes the flattening, and then some point out over here, another explosion out there. For the next week, we're going to call for the market to try a little more upside in here, maybe get up to that 3157 to 3175 area, and then flatten out and move down into that minor cycle right over there. We had a little minor resistance sell zone here that is now removed because of getting through that resistance in the double gap and the minor cycle low on the weekly chart. All of that, I sent out an email saying, well, it's all kind of shop talk, but what it means is that the market is still in this extremely strong pattern where the dips are only minor, the bulls can't get the places to re-enter, and the shorts get killed. That's where we are right now, and we're still in that pattern. Again, flattening, we're going to call for the market to have a small down week. Try to get up over here and then reverse a little bit and then into the next week. And then we think that it will continue in what should be range trading through the end of the year and into the beginning of January without making any more real upside progress and probably not having any significant breaks as we get into this holiday season, which tends to be very slow. Last December was very different. It was very strong. And we think that this December is going to be different and be a lot more quiet in the market. So we'll look for a attempted upside, a small down week, a test 31.57 to 75, and then pull back. And for those of you that follow our cycles and get our charts, the hope is that I don't have to keep redoing them because of this wild swings that we've had on all the news, and that we end up just getting some normal trading in there. So that is look at the short-term view. That is our Market Week show. I hope that you got a ton of great information out of it. Do write us, let us know what you think about our new Investor Pulse little segment in there. And you'll be able to see the updates that we're getting in the momentum tracker that's going to continue to be available to all you for beta. We're doing a bunch of updates in this next couple of weeks, and it's going to make the functionality in there much easier and much more intuitive. And you're going to see that as we share that with you. Please do be careful. It is so crazy out there. And we're always wishing you great trading.
Well, I'm going to the city.